We have a former Bank of Canada governor, now the Prime Minister of Canada, with a minority government under his direction. So how does this combination affect both fiscal and monetary policy moving forward? Jason Daw, head of North American rate strategy at RBC Capital Markets, joins us to talk some more about this. Thanks for coming in today.
Thank you.
Let's start with the fiscal plan, because a minority government is going to work under likely a tighter timeline than a majority government would. What do you think will be or should be the priority for this government? And do you think they're going to be able to accomplish much given the tighter timeline?
Well, we had the Liberal fiscal plan. It had a number of different initiatives, from tax to investment to a little bit of spending. And there's a number of different paths for that to, get across the goal line and, get formalized in a budget. They could pass the current plan as it is if some of the members of Parliament abstain. They could, get the NDP or the Bloc on side. And these are all possible paths going forward. And the timing is really going to depend on, how difficult the negotiations are going forward. So if they're pretty easy, something by June is likely. If they're a little bit more difficult, then that time horizon could extend through the summer.
All right. So you're saying likely a budget by early summer?
I would expect something by June. It's probably in everybody's incentive to move relatively quick, given the difficulties that are being faced with the U.S. But if they do become more challenging, then maybe it extends for a couple more months beyond that.
Do you feel a little bit more optimistic about the immediate challenge of the trade war, given Donald Trump does seem to respect Mark Carney, says he's going to meet him within a week, and perhaps get that ball rolling?
Well, I think even more importantly, from a bigger picture standpoint, and what the equity market's been telling us for the past week, is that it does seem like we've reached kind of the maximum point as far as tariffs are concerned. And, Trump does seem like he's dialing stuff back, at least incrementally, and that's helping sentiment overall. And just that type of process, is going to help with negotiations going forward.
Part of the promises during the campaign, when all of the rhetoric was coming out from Donald Trump, was big money announcements to support Canada's manufacturing industry, automotive industry, basically support those who are going to be affected by the tariff. Do you think there's a possibility of some of that now being rolled back, considering there might be a light at the end of that tunnel?
Some of those might be contingent. I think a big portion of the budget was in other areas. It was in tax, it was in investment, it was in housing. So those other areas that were direct support for tariffs, yes, they could become more contingent in nature depending on the duration.
Okay. Do you think we could see a decrease in deficit as a result of some of that support maybe not happening?
Well, the deficit numbers are definitely larger than the baseline assumptions in the fall economic statement. There is a possibility that they could be less than they would otherwise, but there is some risk on the other side. They have been assuming tariff revenue for the entire fiscal year. They have been assuming that they're going to get government productivity savings over a multi-year horizon. These are unclear on how they're going to actually play out. So there's probably two-way risks as far as the deficit is concerned.
Let's talk about monetary policy as well, because now that we're sort of shaking it out, they face the same problem as before. They don't know what's to come, how soon this trade dispute could unwind. We had heard from them last that they want to wait, right? Mm-hmm. They were like, let's see what happens, because we don't know and nobody knows. What do you think that they will have before them that could help them pivot one way or another? Or do you already expect a cut to happen at the next announcement?
Yeah, well, I think when you look at, just the fact that they went on hold at the last meeting, it probably does indicate that the bar for them to continue cuts in the short term, that bar is probably higher than it was otherwise. And they probably need to see an accumulation of bad data on the growth side or contained inflation to get them to move in that direction. And that's maybe multi-months worth of data, not just one specific data point. And the complicating factor for them is that now you have, the potential for a decent amount of fiscal stimulus coming in the current fiscal year, coming in next fiscal year. And, against that backdrop, they may not need to cut interest rates all that much more. And the market's already pricing 2 cuts, and I think that's probably the maximum that they would be willing to do over an extended time horizon, unless we get the growth data coming in quite soft.
As it stands, we had the GDP number come out earlier this week. We saw a contraction for February for Canada. The U.S. is also slowing down. I guess what other information do you think the bank will consider ahead of its time to make that decision?
We're going to get some labor market data, and the last report was definitely on the soft side. So if there's a continuation of job losses happening in the Canadian economy, then that's going to be something important they look at. But to your point on the GDP numbers, yes, they were weak for February, but the nowcast estimate was pretty reasonable for March. And Q1 looked like it's shaping up to be okay. Very different situation than in the US. We're getting a benefit from exports as there was, a front running of tariffs happening in the first quarter. So that's going to be beneficial to our Q1 growth numbers.
But do you think that'll just then have that opposite effect of having a drop in the next quarter because everybody's front loading their inventory or buying things up because they wanted to get in before the tariffs?
That's definitely going to happen. You're going to see it on the trade side. You're going to see it on the inventory side. And I think that's probably why it's important for the Bank of Canada to look at it over a more medium-term horizon, look at how Q1 plus Q2 is looking, and then look to make decisions as time goes by.
Got it. I've got to leave it there, Jason. Thank you very much for coming in. Appreciate that.